Good morning, everyone. It's September the 16th, 2015. Time to start off another trading day. The FOMC meeting is tomorrow. That is the market's focused. They have run down interest rates. They've run down the financials a great deal tomorrow. That gives them plenty of leeway in case the Fed does raise interest rates. The Wall Street Journal has the odds of a rate increase tomorrow at 25% based on where treasuries and bills, the short end of the market's trading right now. The highest estimate I've seen based on where treasuries and bills are trading is 38%. So less than a 50%, the markets are saying less than a 50% chance that an interest rate increase will come tomorrow. China's market, once again, the biggest news out of Asia was their plunge protection team had to come up and buy everything to make that market, their markets close higher. So central banks have become the buyers of stocks as the last resort. The Bank of Japan openly does it. The United States, there's rumors that all the stocks that the Swiss National Bank owns are actually has been done by the Fed, for the Fed. The European Central Bank has said they'll do whatever is necessary, and obviously China's buying their stocks openly. So stock market wouldn't be this high without central bank intervention. And that's where we find ourselves again today. So the rally yesterday in the stock market probably started with the idea that yesterday's news was weak enough, economic news was weak enough that the Fed would not be able to raise interest rates tomorrow. So that's where it shakes out. We do have news today that might change the thinking. CPI is forecast at unchanged. Core at plus 0.2. I've seen it plus 0.1, plus we'll make it 1 to 0.2. NAHB housing index, and I don't know how this will come out. I don't have a feel for it. The housing news has been mixed. It's called at 61 because it's the National Association of Home Builders, and they need to keep breaking ground and building. These home builders might unchanged from where it was last month. I don't see how it comes in higher, but it could. Crude inventories at plus 700,000 barrels. And then long-term capital flows. That comes in well after the market closes. So the focus is going to be CPI and core. And I don't think anybody will pay any attention to the NAHB number. And then crude inventories, the energy traders will pay attention to it. So I think we have a trading range. We should have pretty good support, 12 to 16. So we'll put a buy, 13 to 17. And then 5 to 9. I think the damage was done yesterday. And it may take a 18.5 to get in. We don't know. Just have to see how it shakes out. On the sell side, resistance is 24 to 28, so we'll go for the top end of the range. We'll go 27, 28 to 31, sell 1, and 3 to 7, sell 2. Usually in the financials, when you have a big washout like we had yesterday, a little bit lower in the overnight, maybe a little bit lower on the opening, but basically a consolidation day is what we look for. And we're certainly not coming off the top edge of a trading range. We're coming, the markets have been hit pretty hard. They've already sold a bunch. And sometimes the low comes in this X and W period, this W period especially. So right now we're at 14. And this market got clobbered yesterday, so we're going to be a little bit more aggressive on the buy side, 5 to 9. And then we'll drop it to 25 to 29. Idea is a trading range, and if we can't get much below the overnight session's lows, then I think that will remain intact. CPI news. If the numbers come in lower than forecast, unchanged is not what the Fed wants to see. Fed wants to see inflation at plus 1 to 2/10 per month, and core inflation is their favorite one, and core PCE, and we'll see if we get that. On the sell side, we have resistance at 24 to 29, so 23, 27, sell 1. 3 to 7, sell 2. Looking at gold. Okay, we're back to our 8 to 10. That's pretty much where we were yesterday. A little more aggressive on the sell side in gold. We had 4 to 6, then 8 to 10. So 8 to 10 is the sell. And then 13 to 15, sell 2. On the buy side, we're going to make 4 to 6, buy 1. And then the buck to 02, buy 2. Seller at 8. Looks like we got a buyer below 3 as it stands right now. Okay, most of China's intervention last night was for their stock market. Didn't see anything about that, and their yuan pegging has been pretty minimal the last week, you know, plus or minus a couple of basis points. And that allows the euro to fall, which is what they want. So this 1275 area, 1260 area, so we'll make sell 1, 60 to 70, and then 90 to the buck for sell 2. Looks like we're headed down if we can get through this 31 area, so we'll make 112 even, 1210 buy 1, then 75 to 85 buy 2. I think we got a chance for getting stops below the buck. We'll put a question mark at 25. And we'll see if we can get it. But we got volume here in the 15 area. Then we've got volume down at the buck. So we've got enough volume in this area at least to pull us down to there, in my opinion. We'll see if that happens. And looking at crude oil, which was up overnight. So 45.50 is where resistance is. 50 to 75, sell 1. It's been a 46 plus market, so we'll make 46, 46 and a quarter, sell 2. Let them get stops above 46. On the buy side, 44.75, 44.50. And it is a news day. Then 44, 44 and a quarter for buy 2. looking for a build of 700,000 barrels. Okay, the E-mini's having trouble at 75. We rallied yesterday. If the rally doesn't continue this morning, my guess is we'll probably see some selling. Just if we go back and we look at the F1 screen, you can just see how close strong, rallies up some, sells. Closes weak, goes down a little bit, rallies back up. So right now we know that we're rejecting prices above 90, and definitely 75 looks so. Maybe a little higher this morning, but failure to push the market through to the upside I think will bring in profit taking. We're just in a trading range. There's a seller at 90, there's a buyer below 30, and we find ourselves right now at 68. And one of the very, very tough things about being in a trading range is that we get caught up in the fact that the market's higher or the market's lower, and we forget the fact that we're in a trading range, and the markets look pretty darn good when you're at the top of a trading range, but it holds, give or take a little. It looks pretty bad technically when you're at the bottom of a trading range, but it also holds. So I don't sell failure to take out 75. I think that's 75 to 80, this sell failure area right in here looks pretty good. We're going to jump it to 85 to 90, which will be picking up this area right over in here. This is our second, and this would be our first band. We got volume at 89, I mean at 79.80. That could be enough to draw us up there. Volume is still moving higher. On the buy side, 60 to 65. Then 50 to 55. Okay, once again the news. CPI unchanged. Core inflation, core CPI up 0.2. National Association of Home Builders 61. Crude plus 700,000 barrels. And I'll get back with you as soon as I can in a bit.